I welcome to this video day, 6th of December, it's Wednesday, 6:30 AM GMT. What we're going to be doing today is looking at a couple of high probability trade setups in relation to a central bank meeting later on, which is the Bank of Canada. We're going to be looking at USD CAD, CAD JPY. We've looked at them both in previous videos. Now, in terms of the Bank of Canada today, I think we will get some decent volatility. And I think one thing's about Forex trading, in terms of news events is, yes, we need to use our technicals, but we need to work out what the central bank is thinking and what the market's thinking, and see if they're out of sync. And in my view, they're out of sync. People are too bullish about the Bank of Canada raising rates in the coming months, and I'm very bearish of the Canadian dollar longer term. Now, in terms of the charts, what we're going to do is we're going to go to them now. Before we do, though, just one point. This is my view as of right now. If you want our full trading techniques and our daily technical analysis of major Forex pairs, you can simply click on the link beneath this video and get live access to our member centres. Right, now we'll go to the charts and we're going to do USD CAD first.
Okay, we're on the chart of USD CAD daily. First of all, just before I draw some levels, I want to look at COT net traders positions. If you're unfamiliar with this tool, you're new to our videos, simply click and join our mailing list to find out more. And also there's some videos explaining it on this channel. It's a fantastic tool. Helps you judge the sentiment behind the charts, which can give you clues to where a pair might go. Now, the way we do this is by comparing speculative positions in red against commercial positions in blue. Speculators are 3-to-1 in terms of their bearish over their bullish positions. So bearish of USD CAD. Commercials, the opposite view, 2.7-to-1 in terms of bullish over bearish bets. I put bets on the positions, same thing, okay? Now, the divergence between two groups is 5.7. Historically, that is pretty high, okay? And for us, it points to more strength in USD CAD. Now, in terms of the way these groups have been moving, I just want to go through, and we've done plenty of videos on this pair, but just for new viewers, when we came down here, the speculators built up a 5-year net short position against the commercials who had a 5-year net long position. So we want to go with the commercials. This is our first trade. So we buy off the 121 level, up we go, get stopped out, okay, for 500 pips in profit. Then we want to come back in. We've done it here as we come back up through the 20-day moving average. I thought we were going to run on to the upside there, but this candle here, we get stopped out for 105 pips. Okay, so we're still nicely up on this trade, and I now think we're going to see a resumption of the uptrend. Now, this I've called it an overreaction candle. You very often see the market overreact to news, and what they did was they saw a decent Canadian unemployment report and slightly better retail sales, and assume that the Bank of Canada might be hiking rates. Some people think this month, but next month there's a strong possibility, according to the market, 40%. Okay, for us, there's no chance the Bank of Canada will hike rates this month, and next month we don't think they will either. We could be proved wrong, but our assumption is based upon what the Bank of Canada have actually said. In September, after they've done their couple of rate hikes, they said more rate hikes could come, but they're cautious, very cautious. They will monitor the data going forward. Now, a central bank doesn't monitor just one employment report and slightly better retail sales and change their mind, in my view. They're looking at the data overall. What the Bank of Canada can see is the data in Q4 is weaker than the data in Q3, okay? So data's actually got weaker in the last few months overall, if you look at trade, exports, etc. So why would the Bank of Canada want to be anything but cautious? I just think they'd be very, very cautious, okay? They've also got NAFTA uncertainty, the trade talks. Well, they're not going to be concluded until probably around April anyway. So our view there is, yeah, with NAFTA uncertainty, that's another reason for the bank to hold. The last bearish fundamental for USD, for the CAD, not the USD, sorry, it's crude oil. Crude oil has lent some support. It did on the overreaction candle because crude oil has been surging to the upside. But it's only speculators doing it. It's got nothing to do with supply and demand. And, you know, for me, the media reporting of crude just doesn't bear any resemblance to the facts. Now, the specs have built up a record net long position in crude oil. Commercials, yeah, smart money, heavily short against them. When you've got the divergence we have at the moment, you're going to see a big break to the downside. I think that's going to propel the USD up further on the CAD as well. So where we are right now is we're flat, but we want to get back long. I've got what I call a line in the sand, which is this line here. That is the level I do not want to see it close below. So obviously when we took out this double top here, pushed on up, yeah. What's happened? Overreaction candle, smaller red. Then that blue one's significant for me. It bounces straight off the level, and now we've got a very small candle this morning. Obviously it's early in the morning here, so London hasn't opened up. So if I just draw another line, we're coming up now. Now, from our point of view, to get back in long, I think this candle here is significant. The red, I think that needs to be taken out. 20-day moving average, I'd normally come through that, but I'll probably come a little bit earlier. 127.30, I think that'd be a good level to come through. And then I think we should just run. I don't see 129 holding, okay? My first port of call for this one was probably regular viewers know is 132. Then I'm looking for a move up to weekly resistance at 135. I'm not going to discuss here, but going forward, okay, the fundamentals just so, in our view, favour the USD. So very low volatility, points to a big move. Obviously, we think it's going to be to the upside. RSI down the bottom here turned totally flat. Stochastic turning flat at oversold. And it's kind of got a snapdragon look to it. I think I mentioned it before. Just like it's going to snap up. The blue will just accelerate out. So through this level, up to that level, then up to 135, the weekly level. Where would you want to put your stop? Don't want to put it right on this level or below it. There's also a round number. We know there's a battle around round numbers with positions. So 125.60, I think, would be a good level. So you got 3-to-1 in terms of risk to reward. And yeah, if we get a nice blue candle after the Bank of Canada, I think we should see a resumption of the uptrend, okay? So we shall see, but I think it looks a decent risk to reward trade. If we suddenly came down, close below this level, below 125.70, for me that would negate the uptrend for the time being, and I'd reconsider our position. That's USD CAD. Let's go now and have a look at which one is it? Oh, it's CAD JPY. Right, we are on the CAD JPY daily chart, and before we draw the levels, let's just take a look at the COT net traders visions top left. Speculators 6.8-to-1 bullish over bearish positions, okay? Commercials oppose them 6.5-to-1 bearish over bullish positions. So commercials heavily bearish, specs heavily bullish, divergence 13.3. Regular viewers will know we like divergences above 10. You normally see a good break in favour of the commercials, and we actually have had a break in favour of the commercials here, okay? They were above, I think, 16 up here. Now we've got a little bit of a retracement, but the commercials are still heavily short. So when we draw our levels in a moment, it's pretty obvious we're going to be bearish. But just want to wait one point. A lot of new viewers might be thinking, well, if USD CAD is just 5.6 and CAD JPY is 13.3, then CAD JPY is the better pair. Not necessarily so, because you've got to see it also in how the groups have moved historically. Okay, so the USD CAD divergence, although well below this one, is still a very good one in terms of that pair. This one is just an excellent divergence anyway. So I like both trades. Right. Now, in terms of previous video we did, we were saying coming through, I think it was the 88 level. At the time we were up at this 20-day moving average. We had a small position in. We had another one in through 88. And this is doing nothing for us at the moment because obviously it's come down, it's bounced back up. But what I really like about it is these two candles here trying to force their way up. Okay, no more spec buying. And I think, if you look at that candle there, or those three candles, tail, body, body, okay, also a round number. You just poke through the round number. There's, like I said, there's always a battle around round numbers, but the specs cannot take it out on a close basis. And now we're running lower today. So where would you want to come in if you want to come in fresh? Well, my own view is you could come in through there, okay, which is the 20-day moving average. So this level gets taken out. So 88.14, I would give you just a little bit of room, probably 87.80. So through these three candles there, okay. For some reason, I'm not really ever keen on trading too close to a round number, just in case the battle is won by the bulls. So always let the round number get cleared out. So from our perspective, we should be going, in my view, hopefully lower. So let me just draw my line. Have I got that straight? There we go. So this level breaks. I think we're off to the downside. I do not see us closing above that level there, okay? So the next round, number 90, you could put your stop back behind there. However, I think behind this level here, something like 89.80 will do it. Okay, so this cluster of candles, so you got that as your risk effectively. What's your reward? Well, from our perspective, we are going down to here, at least 83.50. But I've actually put, on the previous video I did, the weekly support obviously is the next level down at 82. I think we'll get down to there. Longer term, I'm looking for 66. Okay, so I like the look at this trade. Really good divergence. And in terms of the fundamentals, I haven't listed them out here, but we are just so bullish of the Japanese yen. Potential move to risk off. We think they're going to be curtailing stimulus soon, which is going to lead to a massive yen rally. Commercials for us are giving us confidence in this trade. The specs are like pretty long, and there's just no more buying power left from them. So I think smart money commercials, we're with them. We break down, nice red candle today. We should follow through to 83.50, 82, then 66. I'm bearish. Right, that is the video for today. Thank you very much for watching me as per usual. Take care and have a good day.